Welcome to another episode of DeFi Dojo Podcast. As always, we're joined by co-host Mara, and we've heard recently, or at least like in our talks with people, that there's nothing going on in DeFi. It's all just meme coins, and I think you think too, that is the farthest thing from the truth.
Yeah, it's this kind of interesting phenomenon that we see. So this is my third cycle, and like I feel like people get easily distracted. Like there's a lot of flashing lights going on in the casino right now. There's a lot of like meme coins doing, multiples every day. And it's super exciting, and that's going on. And like, even myself dabbling a little bit in meme coins. But that being said, I think it is this like common thing that happens during bull markets where there's just so much opportunity in DeFi. Like yields are out there and are like very interesting, but people kind of, the competition for them goes down, right? And so I think it's, it's an interesting phenomenon we've seen this cycle. I'm starting to hear that more and more, like nothing's much happening in DeFi. People are a little bit like apathetic, a little bit less interested. And I think that's happened before. And that's why, I remember maybe it was last show or the show before that, you were mentioning like, it's pretty common to see very high funding rates, people doing delta neutral arbitrage and major assets getting, double digit percents, even in some cases triple digit percent. So yeah, I think it's just an interesting time to kind of do a state of the union, not state of the union, but like, what's the state of DeFi right now? And like, what is interesting, what's out there? It feels like people are pretty long, right? So like we can maybe take a look at ETH, we can maybe take a look at BTC, even stablecoins. I think there are some humble stablecoin farmers out there, and like, it's not impossible right now to get easily 20%, maybe even 30 and more percent APRs on some of these yields. So yeah, what do you think?
Yeah, I was just right now looking at the SUSDE December 25th, Christmas SUSDE on 25% fixed date. Absolutely wild. And like that 25% can be looped and leveraged up on Morpho, as we've talked about sort of ad nauseum. I mean, like, yes, it's 36 days away, so it's like 1 month worth of yield, and depending on how you're leveraging or where you're leveraging, you're going to be eating, 0.5% to an entire percent in entry and exit fees altogether. But the borrow cost, I mean, let's just look at this, because there's so many things, as you said, that it's almost mind-blowing. So when people say like DeFi is dead, there's nothing to do in DeFi, I don't know like if they're just distracted by the meme coins and it is exhausting. When you're in the trenches, what I've heard is like you're in the trenches and it's the only thing you can look at or stare at or think about. And to me, it just like, it feels like being behind a slot machine in Vegas and just like feverishly tapping a button, but with the capacity of potentially having a slight edge. So there's, a difference there. But oh man, did they remove the market? No, there's no way they removed the market. SUSDE. Here it probably is. Yep. Okay. So yeah, 12%. Look at that. So what this means is, right now, that's a different SUSDE. Ooh, that looks good too. That's December. Yeah, 19. Here's the one that I was thinking about. SUSDE 29. So, the arbitrage isn't as amazing as I thought it was. It's 19%. The actual yield on the timber is 25%. So it's 5% arbitrage per loop or leverage at 91.5%. You can be 10x, you can be like 12x leveraged, but let's just say 10. So 10 times 5 is 50% plus the initial, which is 25. So 50 plus 25, 75% APR. Now, if you take a month worth of 75% APR, like that's effectively what you'll get. So let's just do 1/12. I need my calculator watch. 1/12 times 75%. That's a 6.25% ROI. So even if it costs you 1% to enter and exit altogether, you're still walking with 5% ROI in a month time on stables. That's insane to me. And that, it's still right there, and it has how much available liquidity. Does that say? Oh, 95. Well, it's actually not as much as I thought. Only $706,000. They must be like slowly moving liquidity from here. There is a 7.5 million here, but the yield there is not so good compared to the borrow cost. And then there's, 91.5 here, but there's not a ton of available liquidity. Even just buying the PT itself, getting that fixed rate, fixed date 25% or fixed rate, fixed date 20% in 127 days, like this is, it feels like Anchor. I get that. I understand that. I can feel people's hesitance that there's like this 20% sort of sure thing yield on stablecoins, but these really are like bonds. These are not like algo stables. So while you have to be okay with the exposure to the underlying, whether it be Athena, whether it be USD Zero or usual money USD, none of those things are backed by hopes and dreams. They're all actually backed by assets. So it's a cool time to be in things like stables, a lot of composability, a lot of loops and leverage, but Even Ethereum has tons of stuff going on, and there's big airdrops coming. So let me just poll you real quick.
Go
ahead.
Yeah, just before we move past the Athena, you know, it's amazing how Athena has cemented itself in kind of DeFi and just like yield in general. Like it's setting a rate. I mean, even just look at that one below it, like 28th of May 2025. So that's what, how many days from now? 190 days.
127. Yeah, I can zoom in.
Okay, 127 days, and you can get, what was it? Like a fixed 127
days. You can get 20% fixed rate, 20% here for 26th of March, 20% here, 20% here. I mean, you know, you don't get down to 17% until you're into RSUSD.
But isn't there one? There's an even longer dated one. There's 190 days. If you look down.
Oh yeah, 190 days. 28th of May. Right. Yeah. So 100. It's another month, almost 2 months. Yeah, 2 more months, and you're still getting 18%.
Right. So like it's pretty wild. One thing I've heard, you know, in the dojo, like we're definitely tracking these APRs. Like what is SUSD really earning? I keep on seeing this like 29% number on Twitter and all over the place. You know, we did the calculations last Thursday, and I think it was a little bit lower than that. You know, I think it is worthwhile 20%. Yeah, I don't know. For some reason, like the crypto Twittersphere has been like throwing around this number of 29%, which I think was making people a little bit hesitant on PTs. Like they kind of like weren't worth the juice. But at night, if you're actually only getting paid 19% and the PT's at, you know, 17, 19.
Yeah, I mean, it's calling itself. I don't know how they get this number. We can just go look on chain and see what they're printing out against the collateral. 34%.
Yeah, that's right.
Based on what? Trade trailing moment daily return transfer into the staking reward should be the contract divided by the total staked USDE and annualized weekly compounding. Yeah, I mean, like, let's just do exactly the math that they're saying. So they're saying the daily average of protocol return transferred into the staking rewards distributed contract. So we can go look at that, right? That number is right here. So daily, 3 times a day, you have 433,000 roughly USDE being distributed from the staking contract. Like this is the rewards. These are the rewards, right? 3 times a day. So you can multiply that by 3, then by 365 to get the annualized amount. And then to see how much USD is staked, because that's exactly what this says, divided by the total stake. Let me hover over this again. One more time. Divided by total staked USDE. Okay, well, let's go find total staked USDE. That's over here. This is this number right here. 2.4 billion total staked USDE. Okay. So if we just do the math, which is, this is the latest transfer reward, $433,000, multiply that by, yeah, well, I mean, I did it a funny way, but let me just do an easy way. This times 3 times 365. No, the latest transfer reward equals times 3 daily rewards. There we go. That's what I want. So yearly estimate is just that times 365. You just divide this number by total assets and get the APR. So it is 20.07%. And if you're holding and you're thinking it's 29%, but you're paying 25% on your borrow cost, you're net negative. I don't know why Athena does this. It's been frustrating me for months. They haven't addressed this, but it is like, you can do the math that they tell you they're doing and get the accurate number. It's very frustrating.
And the accurate number is still great, right? Like 20%.
Yes, true.
Getting paid out is phenomenal. So, you know, I don't know why they're overestimating it. It is great, you know, to have like in the dojo community, people who are paying attention to stuff and kind of very analytically doing the math themselves, you know, trust but verify kind of thing. And then can have more informed strategies on what to do with PTs, when it makes sense to leverage, when it makes sense to deleverage. So, you know, I think, you know, just Athena itself, we were just looking at like 17 to 20% on long dated PTs. Super interesting. You can lever those things up on Morpho and other places to get, you know, some pretty wild APRs. You can LP the Athena pools for 30%. A lot of these Athena pools on Pendle right now are at like 30% APR that you're earning on the assets. And then you can also do some crazy stuff. Like you can take USDE over to a place like Mantle and use it as margin, which is kind of this like wild thing to me, this idea of being able to have your margin paying you 20% and then be able to go do a different strategy on it, right?
There's exchanges that allow for this too, right? I mean, we talked to some of our LPs. Go ahead.
Bybit allows you to do it, right? So you can go to Bybit. You're not depositing the stake.
Isn't Mantle the Bybit chain?
Yes, exactly.
Okay, so Mantle is the Bybit chain. Bybit allows you to use USDE effectively as margin for your perp trading or for whatever kind of leverage you want to do. And they give you, what is the APR they give you on that?
Well, they're saying 29% because that's what Athena's giving, but my sense is that you're getting 20%. But yeah, I mean, it's pretty crazy to have margin that's earning, let's just say 20%, and then you can go run whatever strategy, right? So you can go run a delta neutral, play against ETH. Like you can literally just run the same playbook that Athena is running to get the 20% yield. You can go then, get that additionally on top of it. So pretty, interesting wild times. It does boggle my mind a little bit that the Athena, USDE is basically like a vault token that's like running a carry trade. And then you can use that vault token to go and get margin to run another carry trade. It's pretty interesting.
Yes.
But that's the wonderful world of DeFi, though.
Amazing. Yeah, exactly right. We live in exciting times. And so people, going back to the idea, there's nothing to do in DeFi or crypto. It's totally wrong. I mean, never have we seen such exciting yields with such robust mechanisms backing them. I mean, last time, I was saying, what was the onboarding mechanism last time? It was like so many Ponzi's, whether they were node Ponzi's, whether it was forks, whether it was algo stables or tomb forks. And now, like all of those Ponzi type mechanisms have evolved into like real mechanisms. So now we have Athena, we've brought in treasury bills. So everyone was so excited for the treasury bill narrative to come on chain. So many people were hesitant too, like, is this ever going to happen? Is this possible? The regulations are so tough. And now we have so many things backed by T-bills. It's amazing. We have this sort of like risk-free rate under stables all over the place, nearing on 10%. Now it's not the full T-bill yield, but it's just, it's been awesome. I want to do my math. I want to see if I am the jerk, right? Am I the wrong guy? So this is Contango. It's a great place to just sort of like check the SUSDE price. I'm going to do a 3-week average, right? 3-week average change, and I'm going to annualize it to see where we're at. So we are on the 19th today. So 3 weeks ago would have been, I think these are weekly. So 3 weeks ago would have been the Tuesday, the 29th of the month before. Okay, so we're looking at the 29th, which is right here. And so on that day, let's be as forgiving as possible. So 1.31923. So 131.923. 1.111923. Okay, that is the price then, and then 12075. 1.12075. Okay, now I'm going to take that second number minus the first number, and we get 0.008827. It's almost a 1% change in 3 weeks, which, that does not seem like, well, okay, so let's just do the math. Equals that number times, what's 3 weeks? So 52 divided by, 3, oh my gosh. Why am I, 52 divided by 3, there we go. Oops, times, you can't see any of this, 15%. So that is what I'm getting. That's 15.3% annualized last 3 week average. So we're just doing like a snapshot 3 weeks ago to a snapshot today, annualizing that yield, it's 15%. And I'm saying 20%. I think the 20% is way more accurate than granted, 3 weeks ago we were saying 14, 15%, I think. So even between those two things, if I look at the last week, these candles are greener, they are higher. But it's so hard to tell the difference, or like to try to annualize a smaller time frame. Nevertheless, do be hesitant. I'm sure this is saying like oh no, here we go. This is actually pretty robust. So this is saying 22%. They're using the APY. This is actually the APY. So you guys probably can't see this because it's so tiny, but this 222.23, that would be the APY. And I'll show you. So many, actually literally years ago, I built this tool. It's one of the first tools I built to convert APR to APY. And so I throw in that 20% and I say we compound weekly, which is what they say they're doing in a calculation, it would be 22%. So Contango is accurately judging the APR here. Athena's front end, totally wrong, garbage, don't look at it. Contango's front end, totally right, fantastic, do look at it.
Yeah. It's great. It's good to, as we were saying before, trust but verify. I think that graph that you had up is pretty interesting. Like if you zoom out a little bit, it's amazing how the slope of this thing changes so dramatically. You can like almost see when conditions got bullish. It was like, it's like things are like up and to the right, then flat, then up and to the right again. It's a pretty amazing, mechanic. And like, I think the best part about Athena is just how integrated across everything they have. Of course, they've also brought up the all the rates on DeFi, but like for leveragers, that's like kind of a good thing. I did notice that Aave is going to increase their staked Athena, amount that can be collateralized. So that'll be.
I thought you were going to say you're going to increase the LTV.
Yeah, the LTV would be crazy. I mean, it's still only 73%, but if you're holding an asset that like, is earning, let's just say 20%, you can get a 3 or 3.5x leverage on it. I mean, that's still pretty fantastic when the rates on Aave are so low and like consistently low. But yeah, okay. Well, so we've talked about stables. You can get at least 20%, but probably more like 30. And if you want to take on some leverage, you can get, double, triple, even more than that, right? The other thing is just like ETH, right? I feel like my sense of like the ETH yields right now is like you got to be getting also something like 20% on your ETH to make it kind of like interesting. Like I feel like restaking was such a hot narrative and there was nothing for people to really do with restaking. It was like points. You wouldn't be able to like actualize a lot of these yields. And then it's this like funny phenomenon where like now the yield is real and people are like less interested in it. You know what I mean? Like on Easy ETH, on EtherFi ETH, on all of these restaked assets, you're getting your programmatic rewards from Eigenlayer, you're getting your staking yield, you're getting all these different kind of like interesting things, and borrow costs have not shut up, right? Like you're looking at Compound here. You want to kind of tell us what you're seeing?
Yeah, I mean, there's Compound, there's Fluid, if you want to do this automatically, there's Contango. The Aave loop still, I think, in my opinion, remains undefeated as the best risk-adjusted long-term holdy return, probably still doing 25-ish to 30%. But let's go back to Compound because, a few things are happening over on Compound which are compelling. The first thing is they're about to have a big old chunky like OP incentives program. From what I understand, it's like 300,000 OP are going to be given to them. Now, but they have to use it with partner protocols. That's like the catch here. My understanding is that those partner protocols are going to be primarily Contango and like Vaultcraft. Vaultcraft was a bit of a surprise. I love Vaultcraft, but there's a smaller protocol. So I was surprised that a lot of incentives are going to be flowing through there. Now, basically what this means is on Optimism, which is a chain that hasn't really gotten a lot of love this cycle. It's gotten a little bit with Superfast. On Optimism, you'll be able to go and like leverage these LRTs up and then just be farming an insane amount of OP incentives. And to be even more specific, the OP incentives are only going to be going to LRT strategies and only going to be going to partner protocols. So it has to be an LRT strategy on a partner protocol on Optimism chain. And those partner protocols are going to be Contango and Vaultcraft. Maybe there's going to be another one, but that's like TBD. And so that's a lot of money going into incentives on a relatively illiquid chain. So I was just looking at the compound rates because, Contango just leverages these things. Net borrow APR 1.61%, which is crazy low. There might not be a ton of liquidity there, but for the people who are on Optimism chain, there's like zero gas cost. So you're really probably not a giant whale. Just looking at the numbers. Right. So 90% LTV on like Wrap ETHFI ETH as an example. Collateral yield is 4.6% if you include LRT squared. It actually is closer to 5.6% if you include season 4 of EtherFi plus LRT squared, potential airdrop plus Veda airdrop. But let's just keep it at like what you can get on a weekly basis every Wednesday when they distribute the LRT squared. 4.6%, 1.61% borrow cost, 90% LTV, which means 10x leverage. That's a base yield of 31%. So if they start pushing incentives into that, things get super exciting. And there's this other thing happening. It's going to be announced later today. So I feel like we can drop a tiny bit of alpha, which is EtherFi is going to be doing this Golden Bull incentives campaign where effectively, let's just say it's a rumor. If you mint, any of their assets, you will participate in this, rather large incentives campaign, which is going to last 2 weeks and then be distributed at the end of January, I think. So you're going to have to wait a while to get your distribution. It's going to happen at the end of season 4. But for those 2 weeks, you'll be able to get some insanely high APRs, according to my math, even if they attract, 100,000 ETH worth of capital.
Yeah, I'm definitely excited about that. I have some ETH that I've kind of been sitting on for a while or just like close the position and, looking to add to it. And I think when this Golden Bull thing for EtherFi is going to be announced, it will be a pretty obvious place, especially with these like low rates, like, compound rate, super, awesome for having a low rate, kind of lower liquidity. But like across the board, most of these like money markets are lending out ETH right now for like significantly less than 3%. I think that 4.6 you're saying is kind of like the bare minimum yield. Like as you're saying, that's something that you're getting and being able to actualize on a weekly basis. My sense is the APRs for these things are going to be a lot higher. I think that 5.6% number that you were talking about is pretty spot on. And if you start using that math, you're getting into 35, 40 and above APRs on some of these different strategies in places where there's, pretty good risk adjusted returns. If I can use Compound and Aave and Fluid and Morpho and Euler, to get 35-40%, I'm pretty happy. Like that's a good day in my book when I can be using these major battle tested protocols and earning, crazy high returns in my opinion.
There's just so much to do. Now, one of the caveats with the mixture of the Compound OP incentives and the EtherFi, it's going to be a mix of like ETHFi plus Euler incentives, is that with EtherFi, you have to actually mint the asset to participate. It's like a minting campaign. But with Compound, you have to use a partner protocol. Now, partner protocols like Contango are probably not minting the LRT asset. They're probably buying it because it's cheaper. You get a tiny little itsy bitsy bit of a discount. And so one thing you want to be careful of is if you want to qualify for the, Golden Bull campaign, you're going to want to be like manually looping or manually leveraging, which is effectively, for those of you who don't know, collateralizing your borrowing ETH against it and then minting the LRT and then repeating that process. So mint, collateralize, borrow, mint, collateralize, borrow. If you just auto leverage through something like Contango or SummerFi or anything else, you might be skipping the minting phase just by buying the LRT with the borrowed ETH rather than minting. So do be mindful of that. Now, of course, maybe Contango will be working directly with EtherFi and maybe they'll go like through the minting route instead. It'd be really cool if they like opened up a separate vault strategy just for like participating in this, where you could choose to mint or choose not to mint. But we'll see. But do be mindful of the mechanisms of how these things work, just to make sure that you get to participate, because that's always important.
And I do believe that minting is possible on the L2s. So you can go and do the strategy on OP, you can do it on Arbitrum, you can do it on mainnet and some other places. Definitely when EtherFi releases more of the details of it, like go and check, and make sure. I know that they're also going to include eBTC as well. And that, for example, you will have to mint on mainnet. So like, as you're saying, Stephen, going and kind of really checking the fine print and making sure that you're participating in the way these protocols are intending is important. But if you do, I participated in a bunch of what they used to call stake with friends. So they had ones with like Ondo, they had one with Raptor BTC, they had SSV, they've had a bunch of these like kind of like deposit campaigns in the past. And they have been juicy. For a couple of them, I think I made like a 0.5% ROI per ETH that was deposited. And so if you're doing that with leverage, so for example, if you're, on Compound, it's 10x leverage. If you're on Aave, it's like, 14x leverage or something like that. If you're getting, 20 bips, 30 bips, 0.5%, something like that per ETH that's deposited, can be, a very juicy ROI when you can actualize that.
So I was trying to think of like, I wonder, right, if you can participate in the, and we'll have to ask Mike if this is possible, if you could mint the eBTC and then convert it to PT eBTC, like that's the real question. And then collateralize on Zero Land, borrow, let's just say BTC or some derivative, and then mint. Like, because if you could do that, then you could end up getting a positive APR on the leverage. Like right now it's 26% APR. I think there's a reasonable amount of space. 21 eBTCs, 21 times, we were around 90,000. So 2 times 9, or is that like 1.8 million, somewhere around there? It's pretty good. So like, that's what you'd want to know, right? You want to know all the details, because if it is possible, then that's a really compelling and interesting strategy, in my opinion. If you can't, and you can only collateralize BTC, well, the yield, there's no intrinsic yield. So you're really only getting the 0.81% for a supply, and then you can't borrow under that. You could borrow like the $300 worth of, or I guess there's some Merlin BTC available. You could borrow like $1,000 or a couple $1,000s of Merlin BTC for 0.02, but it's really not like, it can't handle much weight. So my hope is that you can convert your eBTC into PT eBTC and then run the loop that way. Now you'll have to do it manually again, because you have to mint, but that could be pretty cool. I wanted to pick your brain about new things launching, just because I was kind of, what's the word for it? Very pleasantly surprised by Zerit pricing. So almost everyone in the dojo, all the big guys, were participating in Fluid, the Fluid loop for like EtherFi season 1 before their first airdrop. And it was like so crazy and frothy and hypey. And we were paying hundreds of percents, I think, on our principal, effectively just saying we'll burn all of our principal down in Fluid for the points. But the season 1 EtherFi was huge. It was amazing. It was a really, really good airdrop. And as a result, we unintentionally racked up a bunch of Zerit points. And so I have, I got a big old chunk of Zircon points, and I thought, okay, you know what? I didn't intentionally farm this. It's probably not a lot. But then I went on, I don't know, where are they pricing Zircon points? There's a few places. You can price them on Bybit. Bybit too has a pre-market there.
Bybit. Yeah, Bybit.
Oh, Avo.
Avo has them. But just be clear, what you're looking at there, those are not points. Those are actual tokens.
Right, they're actual tokens.
42,000 tokens, right?
Oh, Avo doesn't have it.
The pricing for Zircon tokens, because there's a lot of like pre-selling, and this is typically the type of thing we see that happens, pretty close to launch. So like, I think that, Bybit has them. They've been trading roughly around. Yeah. What are they trading for here? So much over
here, they have them between, there's a spread between, the bid ask is not very big. Or the bid ask spread is huge, but between like 6 cents and 8.5 cents, which is way lower than Bybit. Bybit has them at like 10 cents, 11 cents?
They've been trading between 10 and 12 cents. But that's been pretty consistent. There's another place.
And Gate.io.
Gate has them as well. Yeah, there's a bunch of these exchanges that are going to like list Zircon, I think day one, have been doing this pre-market for it. And I think pretty consistently been above 10 cents. Like some of them are trading kind of crazily at like 14 and 15 cents.
Right.
So like there is a bunch of like arbitrage that could be had. But I think the main headline point here is that like, hopefully Zircon is going to be coming out early or soon, I should say. And then two, it looks like pre-market's trading at something above $1 billion, right? Here on Whales, it's a bit less than $1 billion. But on a lot of, these exchanges that are doing, decent volume, like Bybit's doing like, I think they've done about $500,000 in volume so far. People have been selling and buying points or tokens, I should say, like 1.1, 1.2 billion. The other big airdrop that's coming is Hype. And I think that's going to be a big one as well. It felt like there was like so much excitement about it last week and everyone was expecting the airdrop to happen. And it was like, then it didn't. And it's like cooled off a little bit. I am curious, like when we're going to start seeing kind of like the next round of like big projects, actually doing their TGs. I haven't heard anything about it for this week, so maybe it'll be this week, but it kind of doesn't feel like we've had enough momentum, but it feels like it should be soon. I mean, what more can these projects ask for than kind of have this?
I know. I worry some of you were getting Rudy. Like they felt so good during that huge pump where ETH ran up like $1,000. And had they launched that, it would have been like the perfect launch. And I worry that they're waiting for that to happen again, like the next leg up, just because I don't know. No one can predict the future, and I want my free internet magical money. That's the real reason. They're probably going to be right. There will be another leg up, and launching into that could be really beneficial. But I just hate waiting, So like, this does look great. I mean, $12 per point. It's crazy that the points are worth more than the tokens. The tokens are going for $5 on Hyperliquid. Or on Whales, they're going for like a little bit less than $4 on Avo, and like other places, around that sort of area, $4 to $5. That would be awesome for the token. These points, that would also be amazing. It was pretty hard to farm these points, admittedly. You had to effectively be a pretty active trader. But yeah, these should be some pretty juicy airdrops. People were saying the airdrop narrative was dead. Some people were saying that Scroll was such a flop. I don't think so. I just think that like the price went down only after it airdropped. But if you sold immediately or like sold a chunk to make yourself happy and then went and did something with the airdrop, you probably weren't that upset. I think a lot of people just didn't sell and now are bummed.
I think it's also like this whole thing about like people expect, 10% of the total supply to be airdropped to them. Right?
Oh yeah.
And like Scroll was like, gave a ton to like the Binance Launchpad. The amount that was actually like given to the community for farming it over the last year or whatever it was low. And so like just negative sentiment. Like I know that these airdrops are super expensive token wise for projects, but really what they need is distribution. They need to get these tokens out there in people's hands, holding them. Yes, many of those people will sell, but like if you look at like airdrops over the last year and the people that kind of like were, generous with their airdrop, did large airdrops, people still looked at them.
T is the one I can think of. Arbitrum. I always look at these charts before. You see sort of like what you call the V-shaped recovery.
Yeah. Whereas if like you get a bad sentiment kind of thing, so something like a Scroll or like an Aperture, the token just goes straight down.
We don't say that word here.
So like, yeah, fair enough. But yeah, I mean, I'm hopeful that we're going to see, this kind of next round of the airdrops. It feels like Zircon, Hyperliquid, Linnea, those are kind of hopefully within the relative near term. I think Symbiotic, may be coming out soon. Mellow might be coming out soon. Barachain, Movement, we do have quite a bit to look forward to on the airdrop side of things. One airdrop which as a holder of a Celestine sloth, I'm really looking forward to is Mantra. So Mantra is a RWA platform.
The Alm token.
Yeah.
But it's already live. Like it's already tradable. No?
Yeah. And it's been pumping like crazy. It's at $4. It was trading. You look at that chart.
Yeah, it's like a 4x over the past few weeks. 3.7 billion market cap. It's wow. It's one of the biggest RWA asset stablecoin. It's one of the biggest RWA stablecoin governance tokens out there now. And It was before its massive pump by 211%. So for those of you who don't know, a couple of months ago, you could come onto Chakra.mantra, whatever. You could stake your stables, and you were getting what they called like a 1,000% or like 2,000% APR in these future Ohm tokens, the Mantra tokens. And people were like, yeah, okay. I kind of poo-pooed this as well, because I was like, well, when the actual token launches, is it just going to like be down only? Is it not going to be worth anything? Well, the campaign ended, and the people who were farming that for 2 months at current valuation would have got an effective APR of like 12,000% because of how much the value has increased. So 12,000% on like a 2-month period. And I know some person who was in it the entire time with a huge chunk of his stables. That's a 20x return. What an airdrop. So just absolutely wild. And I still don't fully understand how Mantra works. I know they're like backed by real world stuff. And, I was told real estate, and I was told treasury bills, we just need to talk to them. We've been trying to get them on a phone for a while, but it's building momentum. People are excited about it, and sloths are getting an airdrop.
Yeah, sloths are getting something like 810 tokens per sloth, which I think I just saw there. You were saying the price is now at 4.1.
Let's just say $4. So 800 times 4, that's over $3,000 per sloth you have. How much did the sloths cost when they were popular?
Well, I'm into some at 1 TIA, which was great, and then I bought a bunch more.
So wait. Legit. 1 TIA. Let's just say TIA at its peak was what, $20?
Yeah.
Okay, so TIA at its peak was $20. Let's say you bought 10 slots for $20. That's $200, and you're getting $3,000 per. That's $60,000 for. That's ridiculous. You know what?
It also doubled the price of sloths, right? So like they were trading at about 3,000.
Yeah, but also like not only that, but you also bought a composable liquid asset, semi-liquid asset, these NFTs, which it's not like you just bought them and now you burnt your capital. The sloth value has increased ×2. Plus, that's crazy. Good for you. Well done. And I know when you like mint things, you don't just mint one. You go a little bit ham on it.
Well, I think it's just a great thing. I know there's a lot of sloths in the dojo. Like there was quite a few folks that were buying them when they were like $100, a couple $100. And I think it's been a great success. Like the kind of thesis with sloths was that there is going to be a lot of projects that are going to be airdropping to them. This is the first and kind of major example. We saw this with like other, NFT airdrops. For example, Bad Kids got $10,000 from the Wormhole airdrop per Bad Kid, and that pumped the price like.
But those were more expensive. The Bad Kids actually did cost a pretty penny, right?
Well, no, they were like, I think when that happened, they were like $500 or something like that, right? So like the theory is that like there will be this momentum around these NFTs. More and more airdrops going to them, more and more people want to get into it, pumps the price of the NFT, creates demand. So yeah, in general, just like congratulations to sloth holders out there. There was a massive caveat on the chakra farming stablecoins and also this airdrop to sloths is that there is a 1-year vest. So it is very fun to do moon math.
Well, that is a large caveat. I didn't realize that.
Yeah. So, it's fun to do moon math on these NFTs. It's fun to do moon math on like, farming these stables for like, a couple months and getting 12,000% or whatever it is. But unfortunately,
probably better the token value.
Yeah, hopefully. I mean, so it's a 1-month cliff, and then I think it's like either a 12 or 11-month vest. So you will start getting your tokens, right? Like you get a little drip of tokens that are coming out, but you won't get all of them for roughly a year. But on the other hand, like I think it's a good way of distributing. Like that's what these airdrops are for, is getting tokens out in the hands of like people that are going to do something with it. And I know some people that are very bullish Mantra. I like still need to learn more about it, same as you. I don't quite understand how it all works. I do know it's like connected to, a lot of like RWA stuff that's going on in the Middle East. We are hearing more and more about like sovereign wealth funds in the Middle East, like getting interested in crypto. So maybe they have some, rich backers, but it's definitely something I'm going to be paying more attention to. Now that they've airdropped to me, I'm going to go and research them and understand what they do. So
yeah, now that they've given you free money, you need to become a bull on it all.
Exactly. Yeah.
Oh man, look at Akash. Man, I'm not going to talk about Akash because I've talked about it so much in other periodicals. It's cool and it's interesting, and like so is the one meme coin that I'm in. I know you have done a little bit more meme coin trading, and your NFTs have done really well. Congratulations, Spice, Akash. They've been doing really well today. So congratulations to anyone who's been in that, and also anyone who has Hyperliquid and Circuit points. I think those are going to really pay off. You were mentioning Camino as like this place where leveraging JLP has been interesting. Right now, they're like suggesting it's an over 99% APY. Have you been in this position for a while? I know a few people in the dojo have been.
Yeah. So Camino, I think is one of the, like, Camino and Jupiter are probably, the two centers of DeFi. Obviously, there's like Pump.Fun and there's like Iridium and stuff. That's like the center of like.
Do you remember what Camino was called?
I guess
before it was Camino.
Camino.
It was USDM.
Yeah.
Remember this? They had that stable. Yeah, I know. I can't remember the name of it. I mean, we've known them for so long. Who would have thought they were going to become one of the biggest protocols in Solana? Good for them. Good for that team.
Right. Anyway, if you look at the different loops here, like there have been loops that have been just wildly printing, like that one on the top left right there, like Jupiter Sol with a max APR of 25%. It's pretty great.
Jupiter Sol. I'm not.
Yeah, right there.
I see Jito Sol.
Jito Sol. Excuse me, Jito Sol for 25%. These are just one-click loops where you can just like deposit your Jito Sol, borrow Sol against it, loop it up. They're pretty great. Like, across the board, I think like the lowest rates on there are like 13% you can get on your Sol, 25%. This is kind of like the base case for like Sol yields right now, and they have been for months. I mean, I've been in some of these positions for like 8-9 months getting like these returns on Sol. So like it's been pretty fantastic. I know for the degens, like the proper degens out there, they're like, why do I want to get 25% of my Sol when I can get, 5x on my meme coins or whatever? But, there is a lot of kind of interesting things you can do with it. There's now also like restaking. So like not on Camino yet. I don't think any of the Camino assets lets you loop them up, but like the restaking ones, but like just the normal LSTs are here. So for example, BB Sol, which is Bybit. We've been talking about Bybit quite a bit today. This is their new liquid staking token for Sol. It's paying like 10%. They have like a boosted APR on it. So you're getting paid 10% just for holding BB Sol. And you can,
wait, and then why else is the net APY only 20%?
I think it has a lower LTV on.
Okay. Yeah. Okay. So 5x leverage here versus Jito Sol, which has 10x leverage. Okay. That makes sense.
Yeah, exactly. But, these are like phenomenal, just like base level yields. Like we kind of talk about like the compound yield or the Aave yield on like ETH, with like EtherFi or Renzo being like the baseline you should be getting on your ETH. Well, this is in my mind like the baseline you should be getting on your Sol.
Right. And like 20% or roughly 20% on your Sol. Is there an airdrop narrative for these RTs? I know we talked to some protocols that were like from ETH land going on to Solana land, and they didn't seem like they were going to do a big airdrop campaign. Do you know, like, is there the airdrop narrative for
these are all just LSTs, right? So these are not restaked yet. To go to the restaked version, I think the only place that I know you can do it is if you go to Save. So Save is formerly known as Solend. Solend feels like such a throwback to last cycle. It was like, there was so many weird and wonderful things happening on this platform with FTX, with like whales almost getting liquidated, getting liquidated, and yeah, all sorts of like weird and wonderful stuff that was going on over here, including, if you remember, Lido Sol. Remember that was like another big thing before there was like, was it Lido Sol? No, it was Lido Dot.
How is CBBDC getting 5.47% intrinsic APR? So yeah, it was Lido Sol.
Yep.
Yeah. That you could loop up on Solana that was giving crazy returns because there was one giant whale who was borrowing all of the Solana effectively to short it, probably related to the FTX thing. And so the rates were just crazy high. People were, 35, 45% throughout the bear market and the end of the bull market last cycle.
Right, exactly. Anyway, talking about Solend, what I will say about Save, which is formerly known as Solend, the LTVs are much worse. Unfortunately, like Camino has better LTVs across the board.
Yeah.
The advantage is the borrow cost is 4.4%, right? So 4.4% to borrow some and loop some of these things. As I just said, like BB Sol is paying 10%. So if you can, get paid 10% on BB Sol, right there, 10.84%, and you're paying 4.4% to borrow it, pretty exciting. The LTVs are not great. I think they're like 59, 60%. The restaking though is interesting. So if you scroll down, there's like SSOL, which is Sol Layer Sol. And that one's getting all these like restaking points and all these other things. I haven't fully kind of like clued into restaking on Solana yet. I'm a little bit, I haven't been kind of like orange pilled on Sol Layer. That's what it's called, Sol Layer yet. And like why that's an exciting restaking platform in Solana. But, for those that are, you can go and leverage that up on Save. What I'm waiting for is like the Jito. So Jito is going to be another kind of restaking platform on Solana. They already have deposit contracts. So like Renzo's already over there. There's some other kind of like competitors. They're all doing like LRTs on Jito. When I can go and leverage that up is when I will be very excited. And hopefully Camino will have those soon.
Yeah. Let's hope. I mean, there's Camino. That's like one of the big ones. MarginFi is another one. And then Safe, which was once the big, what's that? Drift too, kind of. Solana has this weird thing where like back in the day, most of their money markets were also their perp platforms. So it was like simultaneously for borrowing and lending and also for perp trading. I think, Mango probably started that trend. 01 was another example. Drift was another example. It was kind of weird just to see like this theme, which did not really exist in EVM land.
Yeah. Yeah. Solana DeFi is still this like weird and wonderful thing in that like, it's kind of confusing, like it's
confusing for you the market because the UI is different and the terminology is different.
Right. I guess so. Yeah. But there's a lot of opportunity here as well, right? So like, I mean, just to like recap things a little bit, we talked about like, 20 to 30% APRs and stables. We talked about like 30 to 40% APRs on ETH. We talked about some pretty interesting BTC stuff. I think that was kind of like, double digit things. Even on Sol, you can easily go out there and get 15, 20, even 30% APR in some cases. So yields do abound, which I think is, just kind of like a fantastic thing, for the farmers who are paying attention out there, just to be able to go out and kind of get these compelling yields. Now that we've said all of that, right? We've said all these yields are out there. It's not just about memes. I did hear a rumor and I saw a thread yesterday that you did actually buy a meme coin. Is that right? Like the calculator man who was delta neutral for so long and then honestly shocked me when he went long on stuff like ETH and BTC now owns a meme. Is that correct?
Yeah, I mean, I own one single meme coin, and I gave my thesis. I've seen the trenches of Solana meme coin trading, and they're just not for me. It's too fast paced. You would never see content from me again. I would just be staring at a screen, feverishly clicking around, trying to find the most up to date metrics on all of these things as they mint, print, and all that kind of stuff. So instead of trying to choose one winner from 10,000 per day on Solana, and there will be plenty of winners. Like don't get me wrong, if you have edge there, by all means make your money. I chose the one winner from a pool of like 3 on Cosmos, which is a very small, relatively small ecosystem. I know the founder, I know the whales, I know like the people who are interested in it. Basically every founder in Cosmos or IBC is like stoked about this meme token. It has been doing well performatively, so it's Spice. I mentioned it's like based off of the Dune meme and Akash. So it's a meme coin kind of based around the Akash ecosystem. The Akash founder, Greg, is super into it, super stoked about it, like bull posting about it. The Spice, it's a resource from Dune. The like sort of meme there is that in the Dune world, Spice is this resource that everyone needs and wants. In our world, the idea is that cloud compute, which is what Akash offers, and they work with partners like NVIDIA, cloud compute will eventually be the Spice. It'll be the thing that is so important and so big, and so that everyone wants to really use it and participate in it. So it's been cool. It's been fun, but it's like the only meme coin that I hold, and only because I know the team and I don't have to worry about them like rugging or dumping. And so, I hold some. This is my one single meme coin.
Yeah. Yeah. Well, it's fun. That's the other thing is like we can get all of it very serious in the trenches of DeFi or in the trenches of meme coins or wherever it is. But like at the end of the day, like having some fun, and it sounds like there's a great community around this token. One thing, I have heard about this, which I think is a kind of a fun and interesting narrative. Who knows if this is, how things will play out. But Greg, who is the founder of Akash, he's tweeted about Spice a few times. As you said, he seems to be very into it. He's also seems to be connected to Vivek, and like, there is this like rumor going around that he may be working with either the Trump administration or with the, what is it, Department of Government Efficiency, Doge, for that Doge on AI, right? So he has been kind of like a very prominent person in AI for a long time, and also has this kind of like, is the founder of Akash. So he like plays both sides, on the AI side, on the crypto side. And the rumor is that he may, have a role in kind of shaping policy around that. So who knows? I think it's just a fun thing. I am not a big meme coiner, but I am slowly, for places where I think that there is some like interesting community or interesting fun vibes going on around a meme coin, and picking some stuff up. But you're showing me something which is almost even more interesting, which is Euler. And is this a 484% ROE? What is this?
Yeah. So for the uninitiated, ROE is effectively just APR. Don't overthink it. Contango also uses ROE. It's a TradFi term. It just means APR. Now, the ROEs are super high right now because Euler is doing this campaign. Euler Prime is the place, but it's just like it's a royal campaign, oil. The thing to know here is that these are APRs if you fully vest. There's a 6-month vesting to convert royal into oil. If you immediately claim your royal, you get 20% of the value. So it's immediate claim 20% or 6-month vest to full value. Now, in a bull market, maybe it's smart to vest because these tokens really could take off if Euler gets a narrative. But even without even if you immediately claim, a lot of these things have a good APR. And so what I want to show you is the two things that were super compelling to me. One is there are a few like liquid stake loops, which, you should be familiar with by now. If you've been in DeFi for a while, if you follow, Mara and I. So like, SUSDE as your collateral, then you borrow USDC and you just loop and loop and loop that. If the borrow cost is 10%, the LTV is 95%, which by the way is 20x leverage. You're arbitraging the SUSDE rate, which is 20%, and the borrow cost, which is 10%. There's a 10% difference there. You're getting, a 20x leverage, it's really 200% intrinsic APR, then plus any additional oil rewards. Now, there is only $200,000 to borrow. So these are nascent markets. They're smaller. Like this royal campaign is really trying to attract liquidity. But even without any royal incentives, it's already getting, 200% APR, which is wildly good. But, low liquidity, really can't handle a ton of weight. It's just interesting. And as it picks up momentum and as it gets more interest, I do think liquidity will be flowing in here. The other thing that is not as immediately obvious is actual leveraging. So I have a few leverage longs. I had them on, DYDX. I had them on like Aave. And on DYDX, I am paying a ridiculous amount of money in funding to have those leverage longs open. Granted, I'm doing really well because the markets have been going up. Hopefully they keep going up. And on Aave, I was, paying a reasonable size to hold those open from interest rates. Now on Euler, you can actually get paid to have those same sort of positions. So if I'm here, let's just say my long asset is, let's say I want to do BTC. So I search for all BTC derivatives and I just select them, even PTs. Why not? Let's go crazy with it. And then my short asset, if you want to leverage, is stablecoins. Any stablecoin, hopefully not an interest bearing. You can see that if your supply APY, there's no actual yields here. So it's just the rewards from Royal. And then you take, 20% of that if you want to immediately realize it. So 20% of, let's just say 13 is getting around 2.5. If the supply is higher than the borrow, you're getting paid to leverage. And even if it's not, it's not that bad. Like you're still probably only paying a little bit. And if you're doing like an LBTC loop, you're also getting points. So LBTC, you're getting Lux points, you're getting Babylon points. This can be interesting. So I just want to point this out as like one place to potentially leverage or loop your Bitcoin or your ETH because it's been neat. And, with ETH derivatives, you can actually do this while getting yield on your principal, like wrap staked ETH or wrapped DeFi ETH or whatever else. And so it's been neat. Yeah, it's a low liquidity marketplace. So do keep that in mind. But, go check it out. Go check out Euler.
Cool. Yeah. No, there's just a ton of interesting things going on in money markets. Just to recap again for folks, just because I'm trying to remember, I want to go back and do some more of these trades now that we've talked about them all.
Even get to Fluid either. By the way, a wrap EtherFi ETH smart collateral on Fluid coming out today. So that should also be interesting.
So just wait, sorry, what is that? I didn't quite understand. On Fluid, they're having smart collateral for what now?
for EtherFi ETH. So wrap EtherFi ETH, probably wrap EtherFi ETH, like wrap staked ETH or wrap EtherFi ETH. Ethereum, it's like effectively concentrated liquidity. You'll be able to use it as collateral and then borrow against it. And so you'll be getting LP rewards and fees and points while also being able to use it as, composable collateral and loop and leverage. So that'll be kind of cool. You won't be able to do the smart debt against it for like LRT squared reasons. But yeah, definitely check that out.
Very cool. Yeah. Fluid, great place to, play with this new kind of functionality of smart debt and smart collateral. Aave, just like phenomenal EtherFi loops that have just been kind of like the baseline yield for ETH for a very long time. Compound, very interesting incentives coming out, very low borrow cost to lever up, Easy ETH, EtherFi ETH, Kelp ETH, all these other ones are out there. And then Euler with like just a very interesting place to like add leverage because of this like big incentive program. So another just great example of the opportunity that it's out there in DeFi. And like, I'm certainly out there in the trenches of DeFi farming a lot of these things. It is a great time to be in this space. And just like, maybe my final note for folks is just like, keep on paying attention, right? Like, keep on finding your community. If it's the DeFi dojo, if it's somewhere else, like it is a great time to have like a crowdsourced view of everything that's going on. It's super hard to keep track of everything, but if you are paying attention, the rewards can be outsized. So
as our friend
memes, yeah, go ahead.
Exactly. Yeah, as our friend Farmer says, this is our Super Bowl. We get one of these, twice a decade, effectively, a bull market. And if you make the most of it, if you really spend the time in the trenches and like burn the midnight oil, it can be life-changing. So invest responsibly. Don't, like you can also get burnt and the hype and the emotions can make you make bad decisions. Try not, don't, if you can avoid that, if you can make good decisions and can, relatively conservative decisions, risk-adjusted decisions, then you can make really outsized returns. So it's fun. The vibes are great. I think the stress levels are high. I wrote a post about this, like how stressful the bull market can be. It's totally different kind of stress, but I hope all of you make great gains and change your life for the better.
Lovely.
Well, thank you all for watching and have a wonderful rest of your